Today I made a difficult decision to let go of a particular currency pair I have traded for quite some time on this channel, and it wasn't easy. So in this video I'll be telling you reasons why I left this particular currency pair and everything I saw that made me decide, okay, fine, I won't be trading this pair for a long time until it starts to behave in a certain manner. Also, I made a little bit of change to the journal today, which I will be sharing in this video for anyone who wants to make a trading journal for themselves, to make such kind of changes to it if they see it as valuable to it. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. The currency in particular is the Australian dollar, US dollar. Now, if you remember the very first time I came into this market regarding Australian dollar, US dollar and trendline trading, this was the only currency that ended up in the worst loss record I have ever had before. This particular currency, every single trade was a loss. Let's take a good look at it. This was every single trade I took on Australian dollar, US dollar in the first 50 reps, and every single one, as you can see right here on the close status, were all losses. And even after I watched out for later outcome, only 2 of them made me profit, like very small profit. You can see it here. This ended up with 1.1%, 1.1 ratio and 0.44 ratio. That is like very terrible returns, even though I lost, meaning I would have lost either way and only made, if I had raised $10 at the end, I would have made a total of $14 if I had traded it properly. That is not good. $4 profit. It's not bad, but it's also not good. Now, why did I make this change? I'm going to show you guys transparently in the chart. So this change was due to the fact that I observed something on this market. Let's go to the monthly time frame. On the monthly time frame, I want you to observe the recent months, especially since May 1st. That is, since the May. Do you realize that this particular currency pair has not moved? Like, it has not moved well in all this time. It's been counteracting every single move it made the last month. For example, you can see the first month here was a good up move, and then the next month it's totally nullified that move. The next month it almost nullified that move. The month after that it just danced up and down, and matter of fact, this is the most profitable month it has had yet. The next month it made some look like it's about to make a move for the upturn, and this month it's just been a doji. Though we are just halfway into the month, if this market is going to move upwards, I don't think it's going to move so far away. If it's going to move downward, I still don't think it's going to move far away. So basically, this is not moving. How does all of this really affect me? Well, take a very good look at the name of the strategy. It's called Trendline. It is meant for a trending market, not a consolidatory one. And this is clearly consolidation. So my strategy, this market, they are not good for each other. I'm very sure to Retrieve we agree, because I learned it from her. I'm very sure to agree, including Uncle Mike. If he ever hears this video or sees this video, I am 210% sure, looking at this, they will completely agree, especially for a swing trader like myself. Now, I'm not saying it's a bad currency. I'm saying on the time frames that I trade as a swing trader, it is consolidatory, and when it is consolidating, you can't trade using trendline strategy. You have to trade with maybe supply and demand, resistance and support, and you'll be changing from support to support, resistance to support, and support to resistance. But I don't trade that. And if you take a good look at it on the lower time frame, it is absolutely wild. It is beautiful for a trendline trader. Let's take a good look at it. I'm going to dive into the 15 minutes right now, and I'm going to just scroll out all the way from, let's just make a range, right? A date range, and we're going to look all the way from the same May 1st, right, till today. Let's see. So you can see, as a 15-minute trader, this is like real good, right? It's real good. You put your uptrend here, you have reasons to come into the market. You may have lost like one trade, and then when you come in the second time, well, my brother, you will be making good money. When you take the downtrends like that, the same way, and you see price breaking. Yeah, you can see basically it is not that bad for lower time frame traders. Not really that bad, right? However, for us higher time frame traders, it is too choppy. It is way too consolidatory for us to trade. Again, this is it on the 4 hours, and I'm just going to spread out that same view. So you see, this is all the way from May. Yeah, this is May right here, and this is it. It's very terrible. I'm going to put a vertical bar for you to really see it clearly when I say all the way from May 1st. So on the 4 hours, this is it. From the start of May till today, terrible. I can't trade this market. It's too choppy. But on the 15 minutes, like I said, it is absolutely great. It is beautiful. It is tradable. I don't have a premium account for you to see all of that, but it is good. I think on the 1 hour it's still quite okay. Nope. Okay, on the 1 hour it's not okay. It is bad. It is bad on the 1 hour too. So the only time price made reasonable move here is around this point in time when price did this move upwards. That's the only time price has made like reasonable move, and then this other one when it broke the downside. So these are the only 2 times price had made reasonable move since May 1st, which is, in my opinion, clearly still shows on the higher time frame too. So all in all, this is not something trendline trader should be trading right now. Not that you shouldn't trade it at all ever. It's something you should just let be for a while. And how do you know when to come back to this market? It is quite simple. All you need to do is take a good look at the monthly chart, right? Take a good look at the monthly chart. And when you see the candles start to move well enough, you can see these are times when the candle has moved well enough. So when the candle moves well enough, like when I say well enough, I don't mean it should just move in. It doesn't need to just move in one direction. It just needs to give you a 4 to 5% change. Let's take a good measure of this. You can see this is just 2% change in a whole month. And then when you look at, compare it with even this weekly time, you can see this was a 4.2% move. Now that's a move that is reasonable to trade with. So if it's going 4%, 5%, then it's worth trading. So that is it for the Australian dollar, US dollar. I'm finally backing out of this market. I've been thinking I lost because of my terrible trend line drawing and all those stuff. Yes and no. My trend line drawing was still a little bit inaccurate. However, it was a consolidatory market, and that was the final nail in the coffin. The real reason behind why trading that particular market was extremely terrible for me, even in the new times. Now, moving on. What are the changes I made to the trading journal? Well, I have decided to start being able to collect reasons as to or mitigate a possible loss or validate the probability of a trade, or should I say validate the actual beautiful, or what should I use right now? I don't even know what word to use, but I just want to be able to validate that the trade, I followed the necessary rules. And this is what I mean. So I'm going to go to the current time we're in, and I'm just going to use one of the trades where I have applied all of this logic. This is the euro against the US dollar, and all the way from here, after the time in the trade and all those blah 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 whatever, after here, everything here is just to make sure the trade is properly taken. For example, take a good look at this. It says action touch points. This is the number of touch points I have in a particular trend line. So let's head for the euro US dollar. Now, what this is it's not a guarantee that your trade will work. Don't forget, there's nothing like guarantee in Forex. Financial market is dangerous. You're going to lose money. You're going to lose money at some point. It is a guarantee that you will lose money. And I'm not a financial advisor, so don't take my word for it. Go out there, do your research and look at it. I'm just an honest guy on YouTube sharing my opinion. Now, what did I talk about? I said number of touch points, meaning the number of time price touched the number of time the line got touched by price, or at least very close to being touched. You can see my line was drawn from here. Obviously you have two touch points because you're going to have to draw across two lines, like two places. But after the second touch point, I had the next candle touch it, that's 3. I had another candle touch it, that's 4, 5, 6, 7. Matter of fact, this is like 7 touch points. This is like 7 touch points before price finally broke through it. And I just got that 3 touch points, but let's see, 7 touch points. So it's 105 points away. So let me just leave it at 4. So 4 touch points on the action line. So when I say action line, I mean the exact line that was broken. How many times the price touched that particular line? So this line was the line that got broken. Price had touched it more than 3 times already. Let's just call it more than 3 times. And then my safety line, how many touch points did I have before I entered this trade? I had 1 touch point and only 2 touch points on this line before I entered this trade. Now let's see the next thing to look out for. Now the next thing to look out for is the bar that breaks the trade, that breaks the line, the action line. Is it an engulfing bar, right? Is it an engulfing bar? Is it a strong bar? It doesn't have to necessarily just be engulfing. It could be just be a strong power candle. You know, a power candle. Was it a power candle? Was it a good candle, or was it a one directional candle? That's what this just means. So engulfing bar. Now, if I tick this, it means, yeah, there was an engulfing bar break. And right here, you can see this bar clearly, as you can see right here, allow me to use my arrows. So clearly this bar right here, oh, that's a real big one. So this bar right here clearly is an engulfing bar, very clearly engulfing bar, and it was really good. The next thing I want to see, was there a break of structure? Which, well, take a good look at this. I had price move up here and this bar broke structure. It doesn't have to be this bar, but was there a break of structure? Oh yes, there was a break of structure. And you can see that right there, break of structure. Yes. Was this trade taken during volatile hours? That's what this means. So volatile hours. And looking at the time this particular trade was taken, let's put this arrow all the way down here. You can see it was taken at 7 a.m. Now, when I say volatile time, I mean, was it during the session, the active session of that market, Euro US dollar? I live in a place that is GMT +1. So active time for Euro US dollar is starting from 7 a.m. all the way till 5 p.m. So it's because the New York time starts at 1 past 1. 8 a.m. in New York is around past 1, 2, and 8 a.m. in London is sometimes 8, and then other times it's 7 a.m. in this place. So I just encompass the whole thing, 7 to 5 a.m. 7 a.m. to 5 p.m. is the active time of Euro US dollar in GMT +1. So yep, this is exactly on volatile hour. That break occurred during volatile hours. So with all of these metrics in place, right, let's go back and say, yeah, I had 4 touch points. So this trade is accumulating 97.5% of everything I need to make sure was working before I enter this trade. So this trade is a very, very good trade. Now, it doesn't mean this trade will not lose. I mean, take a good look at this trade again. I want to show you. It has not been profitable. It has not even, you can see it has not spent up to a second above my entry position. I was supposed to actually have entered all the way down here, but it hasn't spent. Matter of fact, even if I did enter up here, you can see I'm at break even. So it doesn't mean this trade is going to work. It doesn't mean it is fail proof. No trade is fail proof. It's financial market. There's no guarantee you are going to lose money at any given point in time. That one is a guarantee. You losing money is a guarantee at some point in time. However, making money in the market is not certain, and I'm not a financial advisor. I'm just a random guy on YouTube sharing my opinion, just like minority mindset, Jasper. So that's it. This is everything I have done to the trading accounts, or rather the trading journal. if you are into trading, I would like to hear your trading experiences, your strategy, what you have learned over the time you spent here. I'm almost a year in this place, and December 15th is going to mark 1 year of this channel, and I hope, well, I've really kept myself accountable. If I'm surprised at it. I won't lie, I've never really stuck to it in for a year for long. I usually run away, but thank you all for being a part of this journey. Do well to hit the subscribe button, share this video with people who you think might find any of the information I found valuable, you may have found valuable also, and thank you for watching. Thumbs up. See you all on another one. Peace.